Good morning, everyone, and welcome to the European crossover webinar. And we're starting out in a relatively quiet session. We're seeing the cash dollar index just moderate here. Just once again, very, very quiet. Same thing here with the euro, close to those lows that we saw on Friday. Dollar CAD just continues to remain below that resistance that we had all week long until Friday, which was 33.09. We expanded a little bit to allow for the volatility, but we have not been able to secure a close above 33.09 here. And cable, after that sell-off, we were looking for support at 28.98. Well, not necessarily support, but that was our target since the beginning of the week, what we called our intermediate target. And we had gotten just below 28.98. Now we've basically trading right here at 28.88 for right now, and dollar yen still holding up above that, area of the pivot, that 927. And actually, unless we get a break below 939, 939 would trigger move much lower, but we shall see. In Australian dollars seem to have calmed down a bit. Looking into data coming into today. The European Sentex Index, which should be out at the bottom of the hour. And then we have Mexican data, but that's gross fixed investment. Not a big mover at all whatsoever. We do have Canadian housing starts. That's going to be out at 8:15 Eastern. I'm in the Central Time Zone, so of course it shows 7:15, but it'll be 8:15 Eastern. And then we have employment trends at 10 a.m. Eastern, 9 a.m. Central Standard Time. Not very much. I mean, the only thing that's going to be of any significance is going to be this Canadian housing start data. As we roll into the next Asian session, it'll be NAB conditions index for Australia, and then until tomorrow when we get UK GDP. But a relatively light day as far as, with the exception of Canadian housing data, with the as far as economic releases. So with that, we'll even the news is very light, so we'll just only have just the one story. We'll go and pull that out. So the Australian dollar rallies and Asian currencies lift as China heads back to work. Asian currencies lifted a little on Monday, and some early signs that the spread of the coronavirus epidemic could be slowing down as some big businesses resume work in China after the Lunar New Year holiday. The workers began trickling back to the offices and factories, or I guess trickling around the country as the government eased some restrictions on travel in the wake of the epidemic that has now killed more than 900 people, mostly on mainland. Aussie Dollar rose as high as 67.06, pulling away from a decade low touched earlier in the session, and also lost 4.5% for the year. The Kiwi bounced 1% from month lows at 64.05. The safe haven yen softened slightly to 9.75 per dollar, while bonds dipped and stock markets paired entry losses with broad appetite for risk. We've seen some positive headlines about a few large companies all reporting they're going to be resuming and opening facilities in China, said Richard Farnowich. We've seen positive headlines for a few large companies also reporting they're going to be resuming and reopening facilities in China. Taiwan's Foxconn, a major contractor in global technology, received approval to resume production at a plant in China's north. One person with knowledge of the matter told Reuters. And car maker Tesla was due to resume production on Monday, a government official said last week. In further news over the weekend, the official daily update on the number of new infections in China reported fewer than 3,000 new cases. And the Korean won, the baht, and the dollar, which all have been heavily sold on virus fears, traded firmer by mid-session. So that's about it here. Although here it says we've seen some buying of Aussie dollar today in line with some of the confidence coming back in market rolls into latter Asian trade, but rallies are to be sold, in my opinion, said Chris Weston. With that, we're going to move into the pairs. As I mentioned, it's very, very quiet, very slight. Actually, not much to go on in, as you say, not much to write home about. We'll go on and start with the euro. Now we're seeing the SPOOs come off these lows at 33.19.5. We've rallied up 8 handles, and that's actually allowed the crude to go on and pop back up right around this 50.15, and which is easing off a bit. But nonetheless, let's go and look at the euro. Euro closed the week on its lows ahead of the head and shoulders target, which is 917. Additional support is 897, where the bears will try to test stops. With the thought that disappointed bulls have been run out of Dodge over the last week, shorts may only count on those ready for a new leg down. Market may be ripe for a bounce once Monday's remaining sell orders have been exhausted. Resistance is followed by 1090, followed by 1020. So resistance comes in at 1090. Let's see, and I meant to go and say that would be right there at 1090. And that would actually take us up. Actually, we would go to that high would be further up higher too. I meant to go and say 1120. So would be currently right now at 990, followed by 1020. So let's take a look what we are now. So what we're looking at as far as coming into the euro is this head and shoulders target. We've got 917, or I've got 917. I know Amanda's got 897. As I mentioned, just a 20-point little range there, but I'm looking for 897, and I'm just going to go on and 997. I apologize, and that's just going to be the support. We did have, as we came into the non-farm payrolls, we were looking at support for 940. We're above that, but I'm not necessarily, that could be just a minor hold. We're really looking for this market to, whether that holds or not, looking for that market to go and reach that target area, which I've got for 917. And then what I was stating here was, I think they pretty much, I don't think there's any bulls left. Now, that's probably a little bit of a stretch, but I'm saying is anybody that's been, holding with any real volume. So at this point, to get beyond that area, bears would have to count on another leg, a strong leg down. Not to say that it can't happen, but I'm just saying is at that point, I'm thinking a lot of bears are going to say, well, I'm going to go and take my profits and leave. That may allow us a bounce. On Mondays, lots of times we'll see a follow through from Friday. So my thoughts are going to be, as I mentioned, we're looking for support at the head and shoulders target of 917. And then from there, potentially a bounce. Resistance is not going to come up until 990. Now looking at cable. Cable closed the week's trading exceeding the intermediate target of 28.98 as bulls threw in the towel. The level reflected decent volume support. Therefore, to start the week, the support level will come in at 28.42, where bears may feel a pause, technically speaking, is warranted. Resistance is going to be at 30.33. So, bear with me. And that might even be a stretch here. I mean, because we're already just right here at 2,900. So we'll have to go with the break, which we had previously before, which is a big pivot, which is 29.80. And we'll look at 28.42. So. So just to recap this again is we did go on and reach and exceed that intermediate target on Friday. You can see it there at 28.98. And that level reflected some decent support. You can see here some volume support coming in here, right there. So we're only looking for this to maybe go a little bit further, which takes us down here. You can see this whole area is good volume. So that's 28.42. That's going to be our support. And on the upside, we'll just look for the bias pivot, which is going to be 29.80, 78. We can call it right there. Let's just call it right there. 28, right there, 29.80. Let's go move into the Aussie dollar. So the Aussie finished the week poorly with a potential move to weekly support as low as 65.28. Intermediate support comes in at 66.53, which would be the 127% extension of this recent move. So we almost made it down there, and we're actually trying to stabilize, but nonetheless, that's going to be our support for today. You can see here at the 66.53. You can see right there. Here we go. 66.53. That'll be today's support. And on the upside, it's going to come in right there. Right there. This close here, open here, right there, which would get us up to 67.38. 67.38. There's actually more resistance coming in here at 67.61. I think the market would have a little bit of a tough time unless things really start to turn around. But at least for now, we'll keep it fairly tight. It's going to be 67.38. The market's fairly oversold here. And I was thinking we might even start a little bit poorly today. There's some better news, as I saw that we read out of the news coming out of China. So a little bit of short term, but once again, this market's under so much pressure. It could easily be that we'd slide back down. And like I said, if we start out on a Monday, you might see additional selling, and then the markets may quell at that point. Let's go on and move into the Kiwi. Okay, there's no reprieve for the Kiwi as the bottom continues to go in and fall out. To start the week, key support comes in at 63.83. You can see that clearly right there with the pink line within a volume zone. And you can see this volume zone that we're referencing here. So we've already dipped below that, and we're just languishing actually dead center in this volume zone. But we're expecting this whole area of good volume to provide some support here. Shorts may look to peel off risk in the area, allowing the pair to stabilize. Resistance comes in at 64.61. Bear with me. And support's going to be 63.83. And it's just amazing. Like I said, we've seen this after a 3-week strong run, and seeing this thing completely come apart. But basically, we're right here. I mean, this is going to be a good demand area. Once we can stabilize a little bit, and I'm thinking maybe today's the last, we'll get a little bit of additional selling, and then we can try and stabilize and maybe see a little bit of short covering come in. Okay, looking here at the dollar CAD. The dollar CAD closed at its best level of the week, but was unable to secure a top that took out the week's resistance at 33.09. Although not bearish, this should flash a yellow cautionary light to bulls who need a close higher to feed the bull. Support comes in at 32.72, followed by 33.20. So we just have not been able to get past that 33.09. We'd actually opened the door a little bit better, opened the door a little bit wider on Friday because of the employment report, but we just didn't even make the most even of that. So resistance is going to remain at 33.09. With support coming in at 32.72, followed by 30. Actually, we're not even that far away from the 72, so bear with me. Let's give it some more room down here, which is going to be 32. Let's call it 32.49. Let's move on down to the Mexican peso. And you can see how this market is simply languished. Even when the equities come off, there's just no rally. So we're saying here the dollar peso found buyers just below 1862, which is 161% of the recent failed rally of 1902 to 1965, and that's right here. 161%. We've talked about that multiple times. Of this rally takes us down to 1862, which is 161%. This has been a hard fought to find any sustained upside momentum during equity weakness. Resistance is going to be 1888 with a breakdown of recent levels targeting 1844 with 1851 providing a buffer. So if we do break lower, we're looking for support coming in at 1851. Right now, as I mentioned here, resistance is going to be 1888. And as I mentioned, even when we break down the equities, the rally just is not sustained. It just quickly gives it right back. So if we are able to push up there, we see some weakness coming today, it's going to be 1888. With support at 1851. Seems like a little bit of a ways away. It is, but This market has been doing just about nothing. Tell you what, considering where we are in this range, let's just go back to the same level, this 1865 for now. If we break lower, we'll be looking at 1851. That will move into the dollar yen. So the dollar yen retained its upside bias, although paring back from stops above 107 or 1007. Resistance will continue to remain to be 1007, and with support at 939 followed by 919. So we mentioned that earlier. I mean, here's the big pivot, but bears going to run into some issues, excuse me, if we do get below 939. So that's going to be our key support for today. And for resistance, it's going to remain. It's going to be 1007. Obviously, if we get past 1007, that's really going to trigger some orders here. You can see here it's going to go on and have us not only potentially run up to 111, but it should be a quick little run right up in here, which is you can see right here. Quickly come in right there, 1061. If we get that close above 1007, we just have not been able to do it. It certainly was open to that on Friday. Now let's go and move into the cash dollar index. So the dollar index closed above the breakout resistance level of 98.42, as well as the weekly pivot of 97.89, opening a challenge to 99.70. Initial resistance will be 98.90, and support's going to be 98.42, followed by 98.14. So potentially we're looking for a move all the way up to 99.70. We talked about this last week, the importance of this 98.42. One of the things that we've looked at, we've seen that before, which is the dollar index getting above this weekly pivot. You can see this thing goes way back, getting above a 97.89 and then falling back, which had happened the prior week. Although we had held the 97.42, we got back above 97.89 earlier last week or before the beginning of last week. And we said, well, the important thing is, can we close or stay above 97.89? Well, we did, and the key was, hey, if we get a close above 98.42, it's on. And certainly we got that on Thursday. On Friday, they extended those gains. So the initial resistance is going to be 98.90, but certainly this thing is full-on bull mode at this point. So support's going to be this breakout area of 98.42 with resistance at 98.90. Any dip back, they'd find support at 98.14. And with that, we'll go and move into the cross rates. So the Kiwi yen rolled over, slipping 75 pips from Thursday's close. Bears will look to test the 69.74, which is confluencing with 69.93, which you can see there's a 50% of this move of 66.30 to 73.55. Additional support comes in at 69.40. Resistance is going to be 70, actually, I meant to say 70.80. So let's go move on here. Upside is going to be 70.80. And the support that we're looking at here is right there, 69.74, which is confluence with 69.93. We're seeing a little bit of buying because, like I said, or I should say a little bit of risk buying with the news that's coming out that some workers are returning back and things may, I wouldn't say normalize, but they're easing a bit in China on the whole coronavirus scare. Currently, right now, the low is 70.10. Let's go, and this is key, 69.74. Well, we're going to go put the 69.74. That's the real big drop. If they come back lower, we do have the 69.93. Let's stay with the 69.74 on the downside. And let's go move on to the euro yen. Well, we've dropped into this area and we're just not a whole lot happening at this point, but the euro yen is bent on challenging 1972 with a likely break going to 1925, which confluences with 1935. You can see that the 50% of this run of 1585 to 2286. Immediate resistance is going to be 2082 followed by 2133. If we are able to go and make it up here, come in here right there, 2082. We're just languishing on here. I mean, we're oversold, so we could quickly get a bounce back, and we do have a key resistance level at 2060. But the real resistance would, if we're going to get some kind of a sell-off, come back after the sell-off, would come in at 2082. There is some immediate resistance here, this key level line. I guess we'll go with that for today. But once again, if we're able to go on and make a stand here, this is where the resistance is going to be at, 2082. But for today, we'll go right here with the line, the key line where it broke, which is going to be 2058. And support right there. If we're able to break lower, which is going to be 1972. Let's go into the euro on. The euro had made a stand on Friday, reflecting more so the general weakness of the Aussie as opposed to any euro strength. The move above the major level of 63.41 allowed the challenge of a technical level here at 64.48, which will remain resistance for the new week. A break above will find sellers at 65.04, and support comes in at 63.41. So you can see here we got this break, but we turned around and quickly given it back. And part of that reason is, as I mentioned, it wasn't so much any euro strength as it was the initial move, which not the initial move, but on the move on Friday, as much as it was Aussie weakness. But we're seeing the Aussie come back as the risk is coming on. We just mentioned it in regards to the prior pair, getting some better news out of China. So now you can see where they've come right back. Right where they broke out of 63.41, they've come back here to the 63.41 area. We'll actually look for this market to potentially even go even a little bit lower, but that'll be today's support here, this key level they've returned back to, which is going to be 63.41. And the challenge up in here, right there, 64.48. This pair has just been a tug of war as to which currency is actually weaker. And certainly we saw the Aussie under a lot of pressure with all the news coming out of China and the coronavirus, and certainly sparked that move. When we'd fallen back below 63.41, once we broke above it on Friday, we took off, but we ran out of gas right there at that level, 64.48, which is going to be our resistance. And then we came back to test the 63.41, so we're just smack dab in the middle right now. Moving on to the Euro Kiwi. The Euro Kiwi defended the breakout level of 69.70 with a respectable close on Friday. Immediate resistance is 71.05, followed by 71.66, which is confluence with 71.59, the 50%. Support is going to be 69.70. So, as I mentioned, we had tested the 69.70 and we defended it. You can see here is on Wednesday, Thursday, and on Friday we took off from that area. And now we've just gotten rather quiet sitting in here, kind of still holding our own as compared to, let's say, the Euro odd. But this is going to be resistance here. Right there, you can see that, which comes in at 71.69, which is confluencing with 71.59 to 50%. So right there, let's call it 71.68. And support, this is the key area if it breaks, which is going to be 69.66. If we break that area, then we'll open the door for us to move much lower. But here's that key level they defended. So right there, 69.68. And moving into the ASEAN. The ASEAN failed at a major level of 74.02. You can see that key level there. Incapable of sustaining a bid. Immediate support is going to be 72.95. Bids were pressed for the lows at 72.38. Immediate resistance is going to be 73.60. Looks like we've already made a run for that 73.60 today. So 73.60, and as I mentioned, 72.95. High for today has been right there, 73.66. We were looking at 73, actually 73.62. So that'll be our resistance, and they took it out by 4 pips. 73.62. And support is that key level, 72.95. So we're stuck in a rather tight range, but like I said, when we broke below, you can see here we had a little gravestone doji here on Thursday after they were able to attain that, and we broke it here on Friday. And here's that 72.95. I think they're going to try and at least they made a move towards it. They weren't able to get at it, but not that far away though. With that, we're going to move into the guppy. Well, this market almost feels like it's stuck in neutral. The guppy over the last few days appears directionless, akin to a boat without a rudder. Bears will look to challenge 40.74. Support below that is going to be 40.24, and resistance is going to be 42.20. So you can see we're just in a very tight range overall. And today is even quieter. Look at that. And you see right there, we're looking for a move down here potentially to 40.74. And onto the sterling odd. The sterling odd appears mired in a range of which is 91.60 to 93.73. The pair is susceptible to stops on either side. The key is, will either push be sustained? Major support is the weekly breakout level of 90.58, with the upside bracketed with major resistance at 94.83. So you can see here, we're just in a very tight range. This is going to be our support though, right here, that key level, which is going to be 91.56. You can see here that they're actually holding just above this key level, which is open on Friday, which is 92.07. We're going to mark that basically almost like a trigger. So we're going to go with that, which is going to be, once again, right there, 92.07. And on the upside, right there, 93.80. Still a ways to go. Let's see if we can see anything a little bit closer on the 2-hour chart. Right there. 93.42. 93.42. And that caps the move. Looking here at the FX pairs, majors, and some key crosses. You can see we're just trading in a very quiet session. Look at this. Look how quiet the euro is trading. Looks like the range has been, holy smokes, only about a 10-pip range for hours. So not a whole lot to look at there. Taking a look at the SPOOs quickly, we did take that dip as we came into the Asian session on Sunday and broke down here at 33. We kind of rallied back up here to this 33, 33-ish area here. There's been a little bit of resistance on the 30-minute on that. We're currently looking at a 2-hour chart. But we're kind of stuck in a little bit of a hole here for the moment. But we've had better news, as I mentioned, come out of China. But once again, they've faded. We dipped down to 33.19 here. We saw a quick 8-handle rally, but we're kind of giving that back up. And taking a look at the crude oil market, looking at April gold. I just say April gold, not crude oil. Rebounding a little bit here. You know, we had broken the prior week. Remember, we came to this 1565, came into the 50s, and even when we were getting better news and the S&Ps were trading in the 3340s, we were still holding up and moving higher. And obviously, we're continuing to move higher here. I think Blake made the case that potentially, depending on what bonds do, we could actually go in and see this pair. And there's the 10-year note. We could actually see this pair maybe potentially make a run to 1620, is I believe what he was looking at, or 1625. One thing to keep an eye on is the Russell 2000 continues to remain weak. There's a short-term look on a half hour. It actually was leading the charge down here, and it's continuing to remain overall weaker. Something to go and keep an eye on here. And lastly, on crude oil, keeping an eye on here. This gets some key support here. We're looking at here on a daily, looking at on a weekly. We'll see how this day closes out, but we're certainly holding these lows. We've already taken a dip below $50. We've jumped above it, and we're kind of pairing back a bit, but I think today's going to be key. Market is trying to hold these lows here, and I think any moves down here towards, even if it would be disappointing at this point if we do dip back below, because you can see here we've already made this dip earlier. Really, there's some very good support at 49.85, but it's going to be a bit disappointing if we see the market come right back down again if we defended it. But we shall see how that plays out. That being said, that's all that we have for today. We'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.